we started looking at really on AirDNA, started looking at the numbers and where are people booking? What is the demand? Where is it at? And so there's about 7,700 homes, I think, right now on Hilton Head Island. Out of those 7,700 homes, only 700 of them are 5-bedroom or larger. But the demand is more than 100% for those 5 bedrooms or more. So that was kind of where we wanted to focus on, was these larger homes.
Welcome to STR Unlocked, a podcast for driven vacation rental investors looking to gain the freedom that comes with an abundance of time and money.
I'm April.
And I'm Nathan.
Our life is busy with 3 small children, full-time jobs, and not nearly enough coffee. And we're unlocking success with short-term rental investing every single day. Join us in our journey as we learn and grow together.
If we can do it, so can you. Hey guys, welcome back to another episode of STR Unlocked. If you're here with us, you are a short-term rental investor who's looking to get into it or is looking to maximize your ADR, maximize your occupancy, and get more return from your rental. So I am joined today actually with Dustin Kennedy and my wife, April. How you doing, April?
Doing great.
How you doing, Dustin?
Pretty good. How are you guys?
Good, good. So Dustin is actually a short-term rental investor that we actually met really at a meetup that we have here in Greenville, the Upstate STR meetup. And he came in and Dustin just had an incredible story. So you're actually like the first guest that we've had on the podcast. So
Awesome.
Welcome. I'm glad you're here.
I appreciate you having me for
Yeah,
sure.
for sure. All right. So tell us a little bit about who Dustin Kennedy is and how did you fall into short-term rentals?
Yeah, it's been a journey for sure. My backstory is my wife and I live down in Florida. We were actually down in Florida when everything crashed. I mean, you could buy homes for next to nothing. Wow. And I was in law enforcement at the time. I spent about 10 years down in law enforcement.
I didn't know
in
that.
the Tampa Bay area. Yeah, so was down there, and I had grown up around real estate investing, and so we started investing down there, and then really decided that Florida wasn't where we wanted to raise our family. So we moved up to the upstate South Carolina area and began kind of our investing / retail real estate side career. Both of us left our careers down in Florida and jumped full force into the real estate side up here, and really started out flipping homes. We built some spec homes. And then kind of just started to scale it from there. And really, how we got into the short-term side is we fell into it, really. We were vacationing down in Hilton Head, South Carolina, and we were actually, my wife and I, it was during COVID, and we were like, we got to get away. So we went down, and obviously there was nobody there. I mean, it was the island was empty, the hotels were empty, but we stayed at one of the hotels. And we were just riding bikes around, and we had been going to Hilton Head for a couple of years and said, what do you think about just buying a place, buying something down here investment-wise that we could, come visit, that we could, rent out when it's not being, occupied or when we weren't using it.
Yeah.
And then that really, we ended up finding a place that we bought with my parents. On that first property, and then that really turned into not so much a place that we got to go visit and vacation because it was completely booked the whole time. We really never got to use it, which was a good thing.
It's a good thing, yeah.
And then that kind of grew from there. So
wow,
it's definitely it's been a scale up type of a journey from every property that we've done, and every property that we continue to do. So. We've leveraged pretty much everything we've done. We've leveraged our own finances to do it, or our own equity to do it. Haven't really dove into the private money side at all. So.
That's cool. Okay, that's cool. Well, so tell me, let's first talk about why short-term rentals. So like you told us how you fell into it, but why do you like it now? Like, what is it about short-term rentals that appeals to you as an investor?
Yeah, it's definitely a different niche. We like the hospitality side. We like, obviously if we go somewhere and we stay somewhere, we like to have a nice place. We like to have a nice setup. When you get there, everything's there.
Yeah.
And so when we started thinking about buying a place. It really wasn't. That wasn't the forefront of everything. It was, let's just get a place.
You were looking more for a second home.
Yeah. And then we realized real quickly we're in the hospitality business now. So it just, we're in the hospitality business that just happens to be with short-term rentals. And that's kind of how our mindset's always been is we're not in the short-term rental business. We're in the hospitality business. So we want to give the best experience that we possibly can. And I guess one of the reasons that I really like it is one, your cash on cash returns and your income that you can make off of it is substantially more than your long-term rentals or your midterm rentals or, I've even looked at in multifamily and run the numbers, and I keep coming back to the short-term side just because the numbers are so much higher. If you get it, if you get a property at a good deal, they're so much higher than what you can get anywhere else.
100%. Yeah, that makes all the sense in the world. And I think that's where a lot of investors kind of mess up. Right, because they get into it. The idea of higher cash flow really appeals to them, and the higher cash on cash return really appeals to them. But they get into it kind of running a short term rental like it's a long term rental. Right, and they don't really understand that it's a business that you have to kind of spend time in.
Oh, it's a full time business. Yeah, and I think a lot of people miss that. Like you said, they don't think of it. They look at it as a passive investment. There's nothing passive about it. We'll go down 3 or 4 times a year, if not more. And when we go down there, we may take a day or two to relax as a family, but the rest of the time we're working. We're constantly painting. We're constantly fixing,
that sounds just like us.
Fixing up properties and even though that, we present a very nice property, 5 minutes after the people walk in, it's destroyed. So, so you've got to constantly keep it, in top-notch shape to be at the top of the market.
That makes sense. Yeah. Okay, so talk to me about Hilton Head. So you guys went out there for vacation during COVID. I'm guessing 2020?
It was 2020, yeah.
Yeah, so you got there. What appealed to you so much about that location? What was it about the island that
So
resonated?
we had, it's hard coming from Florida. And having the nice beaches that you have down
it's different here for sure.
It's a little different. Yeah.
We've got beaches. I wouldn't call them nice beaches.
Yeah. So my wife's from upstate New York, and she really, before we came to South Carolina, she had never been to the Carolinas at all.
Yeah.
And so we enjoy the beach, but we enjoy doing things with the kids, going out to eat. Her thing is, if we're on vacation, let's be on vacation and, not cook every single night, not, stay at home every night. So we want to go to a place that has a lot to do and a lot for the kids, a lot for the adults, a lot of restaurants.
Yep.
We like food. I mean, we like good food. Hilton Head has some phenomenal restaurants that are there. There's a big influence from the north that's there. So it is different from your other locations in South Carolina.
Coastal cities, coastal towns.
Yeah. So we started going there. I think it was 2018 was the first time we went there. And we went there. We rented a condo, and then we went back the next year. And then we went back that following year. I mean, we were riding a bike around and rolled into a new construction neighborhood, and we're like, how can we make this happen? And that kind of where it started out. So,
yeah, Hilton Head's definitely an interesting place because when it comes to Hilton Head, golf is a gigantic thing there. We were talking before we started recording, when you sat down, we were kind of talking about markets and how important choosing a good market is to having a successful short-term rental. We're in Gatlinburg, which is a strong market because of the number of people who come there, the number of rentals that are available, blah, blah, blah.
Right.
Hilton Head kind of sounds like it's the same way, but the added advantage with Hilton Head is that it's an island. Right. Like there's only going to be so many places that can be bought.
Absolutely.
Can be built in on an island. So there's an inherent advantage there from a real estate side. Right.
Yeah.
And your competition is always going to be somewhat constricted just because of we're in the mountains. There's always can be more cabins built on a hillside,
right?
But you're on an island.
Yeah.
Supply is always going to be somewhat constricted, right?
Yeah. And that's one of the things that we tailor to when we're looking at properties. So my criteria and Michelle's criteria when we're looking is we want a place of scarcity. So what I mean by that is an island, right? So, or a place where you can only have so many homes, or, if there are restrictions in an area, we want to be in that unrestricted area. So we want a place of scarcity. We want a place that has been an established location for years. Hilton Head has been a destination location for 30, 40, 50 years now.
Yes.
And so, when you take those two things, that the vacation market, the rental market, it's going to sustain.
Yeah.
When you have an island like Hilton Head's about 98, 99% developed. So there are only so many homes on that island, and there will always only be so many homes on that island. We're starting to see some of the older homes, people are buying them. We looked at a house the other day, and they just bought it. They bought it for $3 million on the beach, completely tore it down and built something else. So that's where it's starting to move to, is that either one, you're going to go in, you're going to renovate these homes, kind of like we did on our second home, or you're going to, buy something, tear it down, and build something new. If the home is not in decent shape anymore, but it's going to be one of those locations that people are always going to be coming to, as and I think COVID kind of accelerated it as well.
Yeah,
being that people can work remotely, people can
for sure
work while they're on vacation, and so that's keying into that as well. So having a space that somebody can work at, in a short-term rental is important. Are there
regulations in Hilton Head? Is that a thing there?
There are somewhat. They're loose. They're trying to put some regulations into play, but they're getting a lot of fight on it, because there's not many hotels on the island, and that's another thing that it's really always been the mom and pop vacation rental companies, really where that that it comes to with Hilton Head.
So it's funny, because talking about Hilton Head, from an outsider's perspective, at least, it sounds like it's like checking off all the boxes, right? As far as it's a destination vacation market, right? People have been going there for 30 or 40 years. It's mature, right? There's people not only from South Carolina, but all over the Southeast go to Hilton Head for golf, for the beaches, for the great restaurants, for the vacation, for the shopping. We've been there. I mean, we've been there several times for the shopping. And so, you're talking about a market that has been around for quite some time, and that relies on short-term rentals to sustain all the people who come to that island to vacation there on the island, right? It's just funny to me, because we were talking about this earlier. Like, not a lot of people talk about Hilton Head,
right?
Like, it's a relatively unknown location.
It really it's a gold mine.
And I think we've always kind of heard Hilton Head as being an expensive, luxurious kind of place. Like, if you have some money, that's where you go, and that's where you vacation. That's kind of the impression that we've always heard. And so, when we went there and we got to experience it, it's true. It's really a nice place. But I guess what I'm wondering is, when you got in for your second place, you were talking about there's a lot of opportunity there, right? And the second place you bought, you renovated. Talk to us a little bit about that. Like, what was the acquisition there like? Were you out searching for places? How'd you find this place? And how'd you get it under contract?
Sure. So kind of one step back, when you're talking about the people that kind of come to Hilton Head, the majority of our people actually are from the Northeast or out West or Canada or Europe.
Interesting.
So we get, most of our guests fly in. We probably have 20 or 30% that are within the Southeast, but the majority of the people, they run, and I didn't even know this, but they run ads on the TV up in the Northeast for Hilton Head Island.
Interesting.
So it's a big draw from the Northeast to come down, especially for golf, especially for the winter time as well. And and that's another thing, is that it's year round. It's not a a seasonal type place. We have bookings all year long.
Interesting.
Which
is very different than a lot of other coastal markets.
It is. Right? It really is. Yeah. And we've looked at other coastal markets, and that's what's funny about Hilton Head, is we've looked at the Outer Banks, we've looked down in the Panhandle and Destin area. We keep coming back to Hilton Head. And one reason is because the nightly rates, it is a little more expensive, but the nightly rates are higher. And so, you get more income, but the real estate's about the same as it is down in those other places. So,
interesting.
To go and to buy a home down in Destin, Florida, versus to buy a home in Hilton Head, I can make, $20,000, $30,000, $40,000 more in Hilton Head on the same exact sales price, just because of the location difference.
Oh, interesting. Yeah. Okay, so the place that you found, was it just you found it on MLS, or were you searching? Or?
So we were looking. Yeah. So we had we owned a commercial building in downtown Easley we had gutted it, completely renovated it, had 4 apartments upstairs. And that particular building, we were probably making $20,000 or $30,000 a year, in long-term rent. So it wasn't a whole lot that we were making from a long-term rent standpoint. Well, when we bought the first house, I'm like, okay, I've got this amount of money over here, and I've got this over here.
Right.
And this one was a lot more work than this one was. And so we ended up, we were like, hey, let's, the market, at the time we thought the market was gonna, kind of peak over. And I'm like, we got to sell this thing. Let's cash or chips, let's get in. So we did. We put it on the market, and we were looking. We were just kind of looking, and we always have gone. Like, we like to renovate homes because we can make it our own. And so we were actually on vacation in Jackson Hole, Wyoming. We took our kids out to go skiing and came across this place. And I called the real estate agent up, and the first thing out of my wife's mouth was, we're not buying this. There's no way. This thing is ugly. There's no way we're buying it. And so we started looking at it, and we actually put it under contract while we were out, in Wyoming. So we had it under contract, came back, drove down there, and finally went to go see it because we'd never seen it before in person. And it was ugly. It was hideous. I mean, was
it a current rental? Like what?
It was a current rental.
Okay.
It was known as the party house. So, it's a 7-bedroom home. It's a block off the beach. It's got a pool, a spa. I mean, it's a really, really nice house. But it was not managed well. The owner that had it, really, he just wanted it as a passive investment, did not want anything to do to it. There was so much deferred maintenance to it. And the property management company just had it on their books. They didn't really care what was going on with it. So at the time, with the way that the market was, we tried to negotiate, and the market was going up at that point in time.
It was still before it got crazy.
It was before it had, yeah. So
it was before like the time of escalation clauses and that kind of stuff.
So we weren't in multiple offers with anybody by
Right.
any means.
Right.
But we ended up getting the property, and we knew day one that we were going to spend a good month renovating it. And I guess at that time it was good timing for us because with COVID going on, we ended up during that time, the kids were out of school. We tried the whole the parents be the teacher thing. That didn't work.
I totally understand.
So we had a teacher that we knew that kind of helped us with homeschooling. And so we did some, she did some. So we were able to remotely go down there, spend a month down there. And we completely gutted the whole house. My wife designed everything. She, we had my office back up here went from being an office to a storage facility because she ordered everything. We took a big U-Haul down there. And
had she ever done it before?
She has done design with other homes, new construction homes, spec homes.
So she's kind of in the design industry.
Is definitely
Gotcha. Okay.
So she knew what she wanted. She knew this was kind of our house, right? So we thought we were going to be able to use it, right? And so we wanted to put nice furniture, nice things in there. We actually, because of with Hilton Head, the challenge that Hilton Head does have is getting contractors on the island, because most of the contract labor don't live on the island because they can't afford to live there. So they got to drive, an hour or 2 hours away, coming from Savannah or, somewhere else. And so it's really hard to get contractors on the island. So we actually brought our contractors from up here down there, and we put them up, and it was cheaper for us to do that. And so we did find some good contractors down there, but we painted the inside, the outside of the house, the whole thing. We put a new kitchen in, we put new bathroom vanities, did, pretty much painted, like I said, painted everything. We probably put into the home about 150,000 into the home.
So that's all the renovation. So it was a complete remodel of the kitchen?
Complete gut.
Complete remodel gut of the bathrooms?
Yes.
You said it's 7 bedrooms. How many bathrooms?
7 bedrooms, and I think there's 8 baths.
8 baths. Okay, so that's a lot of baths. Yeah, that's a lot of baths.
It was a lot, yeah.
Yeah. Just out of curiosity, and again, this is 2020 numbers, so like it's. But can you like just throw out there like what did you spend on the kitchen remodel?
We were in at about 20.
Okay, and then for each bathroom.
So with the kitchen, we didn't go like a lot of the newer homes that are being built out there. They're going with like super high end appliances and your Wolf, your Thermador, and all these kind of things, and people are going to break those.
Right.
Like you don't have to go. Your Whirlpool's fine, your GE's fine because you can get somebody to work on it. You can get somebody out there pretty easy.
Right.
Try to get somebody from Wolf to come out and fix the product for you. So with the kitchen, we went very not super expensive, but not low end at all.
Sure.
And then with the bathrooms, we kind of shopped around. I mean, we floor and decor. We put some of the single vanities. Our cabinet company did like the double vanities for us.
Cool.
So we were probably in. I would probably say on your smaller bathrooms, probably 5,000 to 8,000 each. The master bathroom probably about 10.
Cool.
10 to 12.
And then aside from that, and again, these are 2020 numbers, so like things now, probably obviously you got to price it out. And to your point, you could have spent 20K on the kitchen. You could have spent 80K on the kitchen. You could have spent 100K on the kitchen, right? So like that's also something that's subjective. Not every kitchen is going to be the same. It depends on what your goal is, right?
Yeah.
And so, but I'm curious. Outside of those remodels, outside the kitchen and bathrooms, for the most part, did you put down new flooring or?
We did new flooring.
Okay.
They had carpet. I hate carpet in a short-term rental.
Gotcha.
So we ripped all that out. We put the main floor has travertine, and then we put luxury vinyl planks.
Yeah.
On the top floor, and then
outside of that, it was just painting.
The painting was a big one. Yeah. I mean, it's so the house is technically 3 stories. And it's a big house. It's 4,400 square feet. So it's a lot of painting.
Yeah. Do you remember what that was? How much you ended up spending?
So we painted. We're pretty hands on with as much as we can be.
Yeah.
So I did a lot of like the lights and some of the plumbing and a lot of the painting on the inside. So we saved probably about 15,000 on the inside by us doing a lot of that.
Yeah.
But the outside, I think, was probably in the $25,000 range.
Gotcha. And then outside of that, were there any structural changes that you guys made? Did you have to go fix any plumbing or any kind of rule?
No, I'm trying to remember. When we did the kitchen, we redesigned the layout of the kitchen. They had islands and everything. And there was a couple of piers that or columns that we finished off.
Gotcha.
So tried to open it up as much as we could.
So how much did you guys buy the property at?
We bought it at 1.5.
1.5.
So we bought it. We actually did a 1031 exchange from the previous property, the commercial property that we had.
Gotcha.
So we were able to leverage that up. So when we bought that property, we bought the commercial property, I think, for 200 from the bank. We put money in it. We got a loan. So we really, if you think about it, we put 60,000 down on a commercial property.
Yeah.
We fixed it up using the bank's money of the next couple of years. Flip that, we made about 600,000 off of that one, and then put that into the beach house. So that $60,000 investment, which is actually both of our 401ks when we left, we cashed them in and dumped them into real estate. We took that $60,000 and bought a $1.5 million property.
Okay. I want to ask, was it scary when you liquidated the 401ks?
At the time, yes, because we were broke. We literally left she was in medical sales. I was in law enforcement. Law enforcement down in Florida gets paid pretty well. So we left a decent amount of income, and went 100%. Both of us went 100% into real estate. So we bought a property we bought a small house really with that 401k, and fixed it up, flipped it, and then bought the commercial property.
Gotcha.
So really our investing career has been off of that 401k, and we've just continued to leverage it up. And even during that time, and we've used line of credits from the equity that we've had to build spec homes and flip homes. And so it's allowed us to do bigger projects.
That's cool. That's cool. Well, and that's a good example of how it can snowball, right? Like that's So you bought it at 1.5. You're all in at this point for 1.65. You said 150.
1.65, 1.7. Well, probably 1.75, because we probably have close to 100 in furnishings.
Got it. Okay, so that 150, and this is a good point. Like that 150 that you mentioned, that was purely in just cosmetic renovation. That's not the furnishing.
Right.
Yeah.
Gotcha.
And I feel like that's something that a lot of new investors forget about, right?
They
like
absolutely
you can buy the
forget about
property,
that.
and like you can put any flavor of furniture in there. But in order to get the ADRs you're looking for, you can't just throw cheap.
Right.
Right.
Yeah.
So you're going to spend a pretty penny.
Yeah. And the cool thing is both of us are real estate agents. So one of the nice features and added bonus of being a real estate agent is if I go buy a property, I get to take the commission. Yeah. So I use that commission to furnish some of the
That's very cool.
We actually the entire house, we sold all the furniture to one person. And they showed up with an 18-wheeler and literally loaded all of this furniture. They were going to refinish the furniture and sell it off.
So how'd you do that? How'd you find somebody to buy all of it?
We have and I'm going to write a book on this one day. We did what we call our 6-hour turnover. So the home was completely furnished when we bought it, had hideous furniture in it. When we bought it, that next weekend, we had a U-Haul truck loaded up full of furniture. So Michelle went down, and she started taking pictures of all the furniture, put it on Facebook Marketplace. So we hired a bunch of kids when we got down there to literally grab all that furniture and put it out in the driveway. And we got all the new furniture in, except for some of the big beds. We had to order some of those, and so that took a little while.
Yeah.
But the majority of the furniture, we got it all out, all new furniture in between the last guest checking out and the next guest checking in at 4 o'clock.
Oh my goodness.
So it's 6 hours where we literally unloaded a 7-bedroom home and then loaded it back. And so that was we were able to sell a lot of that furniture to this one couple, and they said, well, we'll take the rest of it. And so they came back, and the big furniture they put on 18-wheeler and took it off. So
that's nuts. So it
was crazy.
So when you purchased the property, did you still have rents that you were honoring?
We did.
Okay,
yeah.
Gotcha.
Unfortunately, yeah.
How did you navigate that?
So it is a little challenging. In the state of South Carolina, they have, I think it's a 60 or 90-day term period where you have to honor those rents.
Interesting. I didn't know that.
So when you and a lot of states have it, you got to honor the rents for 60 to 90 days. So when we bought it was under a property management company. Like I said, it was well underperforming. Just to kind of give you an example, 4th of July that year, they charged, I think it was like $5,000. The next 4th of July, we charged $18,000.
Oh, wow.
So, I mean, there was the same house,
huge,
just big difference.
Yeah.
And so we had up until like October 1st, when we took it over, we had to have those rents, there. And obviously it paid the expenses, but it just covered the expenses. And then we took it off the market for probably about 2 months.
And that's when you did
the whole renovation and everything, and then,
gotcha.
and then got it back up on the market. So
gotcha, that makes sense. Okay, so all in about like 1.7, let's just say around 1.7. So talk to us about revenue. Like, how does that property perform?
Yeah, so going back to the niche, right? So Hilton Head is, and this was in our research, and we really immersed ourselves when we decided we're in the short-term rental business, not when we were going to go into it. When we figured out that, hey, we got a lot of bookings, we got to figure this thing out. So when we decided that, We started looking at really on AirDNA, started looking at the numbers and where are people booking? What is the demand? Where is it at? And so there's about 7,700 homes, I think, right now on Hilton Head Island. Out of those 7,700 homes, only 700 of them are 5-bedroom or larger. But the demand is more than 100% for those 5 bedrooms or more. So that was kind of where we wanted to focus on, was these larger homes, because it people can go to a hotel and they can stay 2 or 3 people in a hotel. You can go get 2 or 3 bedroom condo really easy. You can't get a 6, 7, 8 bedroom home very easy.
100%.
And so that was kind of our focus. So when we started down that path, that was kind of how we got to this particular home, because we were only looking at the larger homes. And then when we renovated it, it was interesting because all of the homes in our area, right on our street, were all managed by the same property management company. And so the neighbors, obviously, they would come down. We ran into a couple of the neighbors who owned a couple of the other homes, and they would come up to us and say, "Hey, what are you going to put it on the market for? What's your nightly rate going to be? What's your weekly rate going to be?" And I told them kind of what, based off my research, what I was going to put it on. Every one of them laughed at me.
What is it? What is your average ADR?
It's about $1,150 a night.
Gotcha.
And then in the peak season, it's about 2,000, 2,100.
So what'd they say?
So when I told, and this was 2 years ago. Well, no, this was 2021.
Yeah.
So into 2021, and I told them going into 2022, I said, we're probably going to bump it up to about 1,700 for peak season. And they're like, yeah, okay. They're like, that's not going to happen. And I was like, in the back of my mind, I was like, watch me. So you want to present. We call it an Instagram worthy home, right? You want to present a home that is, somebody says, hey, I want to go stay there. This is as nice as my home is, or nicer, and I want to go to that place. And so we raise the rents higher than everybody else. And I think a lot of people get scared and they focus on, I just need to get rent, or I just need to get bookings, so I'll go below everybody. Well, you don't necessarily always have to go below everybody if you've got a good product.
Yeah.
And so, we put the product out there and we put it higher than everybody else. And within probably, I would say by mid to end February, we were completely booked for the entire year. And incredible. It was to the point where, really, I'm just trying to think. So I think we went down once. We got to use the house once. And even like this year, we're going down for our vacation the week before Christmas. That's our vacation, right?
Right.
We didn't even get to use the beach house, but it's been, the income has been crazy.
Yeah.
Like the growth side of it. We've raised our rents from last year to this year. We've raised them for next year, and even next year, we've got from the end of March until the end of July already booked for that particular house.
So are you guys operating at about 70% occupancy?
We're about 70, 75.
Okay.
Yeah. Which is, it's high. That's a little high from kind of where my projection was. I think average, and the market's been good. So I think we are going to see a little bit of a slowdown. I think average is probably 60-65%.
Yeah.
Which is still good. I mean, if you're underwriting based off of that, you're going to do fine.
And what was the yearly? Like, what are you pulling in total revenue yearly?
Yeah. So this year's been good. We're sitting at 365 right now for the year.
Good for you, man.
Which is more than we could ever, ever thought of.
Yeah.
We'll net probably, after mortgage and everything and expenses, we'll net probably about 150. Well, actually, no, I'll take that back. We'll net about 180.
Wow.
So it has been, going back to if you kind of go back to the whole picture of things, you go from a $60,000 investment to now it bringing in, $150,000, $180,000 in income every single year.
Right.
And somebody else is paying me to do it.
That's right.
And so that's where you can't go find any other product or any other investment that's out there that is going to give you the returns that you can get.
Yeah.
on these type of investments.
Yeah, and that's what I tell people often with short-term rentals. You get all the other benefits of real estate, right? You still get like everything else. You still get, right? You get the and that's not that we count on it, but you get appreciation. You get the tax benefits, right?
Which is huge, by the way.
Which is huge. Which I might talk to you about in just a second. We might talk about that a little bit too. The tax benefits with the depreciation, but you also get the cash flow. But with short-term rentals, it's just much more cash flow, right?
Yeah.
Now it's a trade-off. You're going to spend much more time in the business. Right. The amount of time that you spent setting things up and then managing the property, because you guys self-manage, right?
We do self-manage. That has now turned into my wife stepped away from the retail side of real estate.
Okay.
And we've created a property management company.
Oh, cool.
Because some of the neighbors are like, hey,
how can you do that with us?
You're getting better numbers than I am. Help me out now.
Yeah.
So we just launched that here recently. So
Congratulations. That's awesome. That's cool. Well, and I want to tell everybody about that, and let's talk about that in a minute. But I think it does come down to the simple thing which you said earlier, which is you had the right product. And I think too often people just think, oh, well, Airbnb, I'll make lots of money. They go out there and they'll find just anything. They'll buy almost anything and put it up on Airbnb, just thinking that they're going to make money. And that honestly could not be further from the truth. And I think that if you look at it, and we've talked about this a lot, like, because we're in the process right now of acquiring our second one and looking around and trying to figure out what we want that to be. We constantly come back to the idea of, well, we could do this and it would probably work out okay.
Right.
But it's not the right product. Right. It's not the right product in the right place.
Yeah.
To the right people.
Yeah.
And so that seems like something that you've done super well with this particular one. And I want to touch on the interior design for a second, because you mentioned about it doing the remodel and going in for the bathrooms and redoing all of the entire gut on the kitchen, good furniture that you're bringing in. Those things is what elevates your return.
Right.
Yeah. And I think, I see a lot of Airbnbs and there's people who's like, hey, I'm struggling in the Facebook groups, and they're like, hey, I'm struggling. And they throw up their listing and I'm like, I wouldn't stay there.
Right.
Like we're not super bougie or anything, but I'm like, there's better options.
Sure.
Right. There's better options. There's better products out there that I can pay the exact same thing for and have a better experience at those other options.
Yeah. And we always kind of look at it as you can either stay at, a Holiday Inn or the Ritz-Carlton.
Yeah.
Where do you want to stay?
For sure.
And obviously with the size of the home that we have, our market is families. Our market is, call it higher end families, call it middle class. But when we can sleep 21 people. So if you really look at it and you break it down, if 3 or 4 families come together and it's, $15,000, that's not a whole lot more than you would be paying if you stayed and everybody got rooms at a hotel.
Yeah.
Right.
But it's giving them that experience. And it's, one of the other things that we did on the first one that we bought is the entire neighborhood was a short-term rental neighborhood. So 60 something homes are all but like 2 or 3 are short-term rentals. And we wanted to stand out. So it's about 7 blocks off the ocean. So it's a good 5-8 minute, 10-minute walk, especially if you got kids and you're carrying everything. So we invested in a 6-person golf cart. And we bought a golf cart, and it's funny when you do something different, how people start copying.
They catch on.
Right?
Yeah.
So the first several months, it was just us. It was just our golf cart, and we were getting bookings left and right. I want to use the golf cart. I want to use the golf cart. And then one of the other, there was a couple guys in the neighborhood had 3 or 4 homes. Well, they started a golf cart business. But, they started having these, they would get these golf carts, and then they would go around the neighborhood and say, hey, you want a golf cart? You want a golf cart? Well, nobody's done that before we had started. The difference still is that we included the golf cart in the amount. We're not charging the extra $1,000 like they're going around and doing. So it's still setting us apart. And I think you got to do that. You've got to be, there's thousands and thousands of homes on Airbnb and VRBO and there's so many homes, even in Hilton Head, there's a lot of choices, right? But you've got to set yourself apart, and the design is really one of the biggest factors.
It is.
You want to keep it clean. You want to keep it crisp. You want, a lot of people we'll see pictures and they'll have these big quilts all over the place. When you go and stay at a nice hotel, it's white I mean, it's really just clean, crisp, and people, it's inviting.
Yeah.
When we bought that house, it was so dark. Everything was brown. Everything was, you know, yellow and dark yellow, and obviously it was outdated. But it was just it wasn't inviting when you got there. You want it to be inviting when somebody walks in the door. They're like, oh, this is a nice place. I want to stay here.
100%. One thing that you mentioned using AirDNA as for the analyzation. So first off, when you were doing your research, because this is a big part of it for most people, like they're in their journey trying to figure out where they want to go and the product that they're going to invest in when they find their market. But finding the market's the first thing. Like that's the most level.
Important.
That's the most important, like top level. I want to point out that you actually visited the market before you guys decided to invest there.
Right.
Important.
Yeah.
Right? Like you understood what the drivers were to the market and why people go there, and you understood the kind of people that were going there, and you kind of understood what the market was about. But then you actually went in and you started doing the analyzation. Most people, there's a lot of hate for AirDNA, because I think a lot of people will type into AirDNA the zip code, or they'll type in the address or the market, the neighborhood, and then they see the average number that pops up, and then they're like, well, wait a minute, in my other Airbnb, like I'm doing way more than that, or I'm doing way under that, or whatever. How did you use AirDNA, and how was it effective for you? I'm guessing that you dug into the data, right? That's more than the surface level free information that AirDNA gives, right?
Yeah. So I never, when I was doing my research, a lot of the guys that I was listening to and following and that had already been successful, they kept going back to do guerrilla marketing. So, you know, instead of figuring out and letting a software come up with a number that I'm gonna rent my house at night, I want to know what all my competition's doing. So I'm literally going, and I still do it today, you know, even on the properties that we're taking on from a, you know, property management standpoint, when we're running the numbers for them, we're pulling all of the listings manually and doing that. Because if I go on to AirDNA and I look at my property, we're talking $700-800 difference in what I'm charging versus what AirDNA says.
100%.
And so I use AirDNA just from the research analytical side of where is the demand and how is this market? Is this a good market? Is there people coming to this market? You know, what size home should I be buying in this market? I don't really pay a whole lot of attention to the dollar amount, because I know that even if you call that an average dollar amount, those average homes look a lot different than what
100%. Right.
And so there is a big difference there.
So you use it really as a starting point.
Yes.
Right. So you use AirDNA as a starting point, and then you actually go into Airbnb, you go into Vrbo, you're pulling what you feel like is accurate competition.
Right.
Yeah. Accurate competition. And then you're just seeing how they're performing.
Yeah.
Right. And I'm guessing the quality of that product, and again, I want to keep going back using the word product, the quality of those competitive products factors into your decision as well, right?
Sure.
So like for instance, if they're pulling in, let's say $500 more than what AirDNA says they should be, and you know for a fact that those products look outdated and look awful, if you were to be able to roll in there and you were to be able to do a remodel and you know, to have a more contemporary space that does feel open and inviting, like what you were saying earlier, you could probably even blow the competitors that you have out of the water.
Yeah.
Right.
Yeah. And that's what we did.
Yeah.
That's exactly what we did.
Yeah. So smart, dude. That's so smart. That's cool. All right. Well, then tell me at this point, now that you've had a little bit of time, because how long have you had this property now?
So we bought the first one in 2020, and then we bought the second one in October of 2021.
Gotcha. What advice do you feel, well, let me start here. What do you think probably holds a lot of investors back from being successful in short-term rentals?
You know, short-term rental, the investing side of it is not cheap, right? So I would say that the number one thing that holds people back is the financial side. And even myself, when I look back and I say, you know, now knowing what I know now, would I have done it the same way, or would I have tried to do private money or partnerships, or, you know, create a fund or create a syndication or something like that? And you can get so much further with collaboration, right? You can, when you start to collaborate and partner with other people and use other funds and not just using your own funds, you can go so much further. And that's in real estate in general. That's not just short-term rentals.
Yeah.
But I think that the financial side holds people back. If you have, right now, there's so many people that over the last 2 years have gained a ton of equity in their personal house. My thing about it's great to have a personal house. Your personal house will never get you to financial independence. Your personal house will never pay you a dime on a monthly basis. So if you have the equity in your personal house, leverage that to go buy an investment property, a short-term rental. And if you can't go as large as, a 6, 7, 8 bedroom home, partner with somebody so you can, because you can make money doing any sort of Airbnb. You can go, buy a mill house and make money. You can buy, a 2-bedroom, 3-bedroom condo and make money. But to truly make income replacing money, you got to go big, right?
100%.
And I think that not only is it the financial side, but I think it's the fear. It's the fear of just going big. People, they can't get past the thought. And we've got friends that say, hey, I want to buy a beach house. I want to buy a beach house. Okay, let's talk to you about buying it. I could never do that. I would never put that much money into a house. And so it's just that fear of taking that first step.
Yeah.
Was it scary? Sure it was. The first time we bought the first house, and we bought it in October. I mean, we knew that, the winter time down there was slower. What we thought it was slower, it really wasn't. But, so you just don't know until you get in. If you're risk adverse, go conservative, but just take the step.
Yeah.
That's the biggest thing.
I mean, we resonate with that because it was a big swing for us. Right.
Sure.
When we bought our short-term rental, it was definitely one of those things where we were probably cutting it closer than we probably should have, and because we wanted to take a big swing, because we generally speaking have the same philosophy that you do. I mean, we're talking about getting a bigger property, kind of the niche that serves, and the fact that there's a smaller supply of the larger properties, and there's that many people that's coming that's needing them. Right. You're probably going to put yourself in a better position. Like those were all things that we were doing and thinking. So we kind of had the same approach when we used all the money, all the capital that we have. It was definitely cutting it close, probably closer than we probably should have. It's worked out for us. It's been great. Right. Like, our property has given us a 25% cash on cash return, which awesome. We're happy with. Yeah. It would have been cool if it was like closer to 30 or like getting the kind of return that you're getting too, but it worked out for us. Sure. But we understand. I mean, it was scary for us too, because we definitely, you stay up at night a few times thinking, okay, we just dropped a lot of our cash into this property. And, what if tourism falls apart, or what if there's like another pandemic and things shut down, right. or whatever, like all those kind of thoughts, start to creep in. So I totally get it.
I think too, a lot of investors that when you get into larger properties and when you get into larger assets, you've got to have that reserve. You've got to have, the 6, 8, 10 months of reserve there to feel comfortable. And that's, that going in day one, we were like, hey, this is the first thing that we've got to get up to, is where we've got enough reserves that if the market does slow down, we're okay. Because I think a lot of investors, especially, investors that if you talk to them that they lost, millions of dollars in the last correction or the crash, whatever you want to call it, that was the reason that it did. They were over leveraged. They didn't have reserves, and they put 100% of everything into it.
Right.
I think that anybody can get to any place that they want to be. It's just a mindset of taking the steps to get you to that point. And so like for us, our next level is to try to figure out, do we expand? Do we go to, partnerships with other people? Or are we, just start slowly building out our portfolio? And if we're doing that, we were looking at a property not too long ago, and, I was talking to Michelle, and I said, do you realize what we're going to be doing here is we're going to be refinancing the property that we have in Hilton Head. So we're going to take all the money that we put into this property out to put into another property. Now the cash on cash return for this property just became infinite. And this property is paying for this property now. And so, when you get to that infinite return, you can't go any better than that.
The sky's the limit.
It really is. Yeah. So, there's a tremendous amount of opportunity that's out there. I think we're kind of in a sticky market right now where people are scared to do anything. I think you are going to start to see some more opportunities from people that bought properties that were undermanaged over the last year or two, that they're going to start dumping those properties. And so, in the next 6 to 12 months, it's going to be an opportunity to gain some really good properties that were just poorly managed or poorly run. So,
just out of curiosity, if you were to start over from scratch, what would you do?
I would
let me ask you this. And we'll make it even more creative challenge for you.
Yeah.
Let's say that you're starting over from scratch and you had no money. You didn't have a property, the commercial property that you're able to go over, because that's the position a lot of people are in, right? What do you think that you would do under those circumstances?
So I think if you start telling people what your vision is, you start telling people what your dreams are, and you start expressing what you want to do, there are people that are out there that don't want to put money in the stock market that would absolutely, invest, whether it's family, friends, starting out small and then expanding that to, investors, institutional investors. I mean, there are people that literally on a daily basis are handing money out. You just got to find those people. And the only way to find those people is to get out and tell people what you do. And so, if I was starting all over and even really now, I mean, we've done everything ourselves. And so, even now trying and getting more into the partnership side of things and the funds and the syndications is kind of our next step, where we can take this and we can take it to the next level. Because my opinion and a lot of opinions of other people that are already doing these funds and these syndications is that this asset class, the short-term rental asset class, is really the last non-commercialized asset class that really is commercial. And so when you're buying these properties today, if you're buying these properties, you're buying them off of what the home next door is selling for versus a commercial property that you're buying it off the income. So even during, and I know we sold one of the properties, the very first property that we had, we sold it this past year. And we sold it based off the cap rate, not what the homes were selling for in the area, and we got it. And so you're starting to see that a little bit, but you also are starting to see a lot of the institutional investors, the big guys, starting to get into the short-term rental side because they can make more money on that side than they can on the long-term side. So long-term plan for us is to build out a portfolio and, hopefully get it to a point where one day we can turn it over to an institutional investor or a larger investor. And then actually get to relax.
Yeah, that's good. Yeah, right. Actually sit on the beach.
Actually sit on the beach.
Actually go to a vacation home and enjoy your time. Yeah, for sure. That makes a ton of sense. I think that it's actually kind of interesting because we're actually very much in the same place. And it's actually been somewhat interesting how much private money is out there. I don't think that we understood quite how many people were willing to lend. Now they're going to lend based on how comfortable they feel, and there's risk valuations, all that kind of stuff. But like it's been really interesting. I guess prior to maybe a year ago, I guess I just never. I kind of only thought you had to have really been doing this for a very long time and you had to have had a massive portfolio and it's not really that way. I mean, there's plenty of people who's just looking, like you said, for a better return on their private money. And if they feel like you can get the job done and, they feel like that you know what you're doing and, will honor the agreement. It's actually been surprising how much private money there is and kind of how easy it is to get access to it.
And a lot of them come to these meetups. I mean, a lot of them will just come. They don't have any interest in getting into investing,
right?
The actual work of it. They come to the meetup and they, you can just kind of talking to them and just develop that relationship from there. But they got to know what you want to do. They got to know your plan. So you've got to have a plan. And really it does. I mean, it does help out if you have a track record.
Yeah.
So
sure. Yeah. Dustin, this has been awesome, man.
Yeah,
I really appreciate you coming and sharing and being so open and honest about, your experience and what's happened there in Hilton Head. Do you know where you're going to next? Have you guys thought about a next market? Will you stay in Hilton Head?
Yeah, I think we are going to stay in Hilton Head. Yeah. Like I said, we've looked elsewhere and kind of keep coming back to Hilton Head. There's, we kind of were talking before we started this. Hilton Head, the majority of the homes were built in the 90s and the early 2000s. So it's time for a lot of these to be renovated, and you're going to be able to get a lot of these at pretty good deals. And the the cash on cash return and the nightly rates and everything points back to Hilton Head. And as long as people are still coming to the island, there's always going to be that demand there. And a lot of other places got so popular, and Hilton Head did get very popular, and the prices went through the roof.
Yeah.
But a lot of the other places, you can get better nightly rates for, a lesser price on Hilton Head than you can anywhere else. So the other thing is like we've got now everything's there. We've got our staff, the cleaners and the maintenance and the contractors, everything is there. So if we were to pick up and go to another location, now we got to establish that instead of building out what we have.
Which takes a lot of time.
It does.
It takes a lot of time. And I think that's something that a lot of people underestimate is finding the right cleaners. Because I know we went through a good number of cleaners.
Yeah, the cleaners is probably the number one thing that you got to focus on is you got to have a good cleaner, because that cleaner is going to, if there's a problem, if it's not clean right, it's going to be negatively impacted on you. So
100%.
We've got really good cleaners, and we incentivize them. We bonus them. If every time we get Superhost, we'll send them a little bonus and say, hey, you helped us get Superhost again.
Cool.
So here it is. But cleaners is probably the most important person or group of people that you can find in a location.
That's awesome. How long did it take you to find the cleaners?
We got lucky. So when we bought the new construction home, the agent that was representing the builder was friends with the lady that she actually owns a cleaning company.
Gotcha.
And so she grew up on the island. She's been on the island her whole life, and she's been cleaning for like 20 years. So she's phenomenal, and
she knows what she's doing.
She does, and she keeps that whip cracking on her cleaners. She comes in and she inspects afterwards. And,
that's so in a lot of ways, a vacation destination market like Hilton Head, Gatlinburg, we do have it a little easier because even though we had to go through some cleaners and we had to find the right company that we wanted to work with, they're there, right? And they understand, cleaning and setting up for a vacation rental is very different than just a cleaner who would just come into your home and just clean the house. Right. It's a whole different skill set, right?
Yeah.
And so it's I find often like at the meetup that we have here in Greenville, oftentimes people are always looking for cleaners,
right?
And it is more difficult in a place like this. I'm not saying you can't find them and train them. You should and you can, but I'm just saying I do feel like in vacation that's one of the benefits of investing in places like what we invest in is because you kind of have that infrastructure that's already in place. And it makes it easier. You have to find somebody. And it does take time. I'm not saying it's easy to find somebody, but it's easier.
Our biggest challenge has been landscapers.
Oh, I
mean, we don't have a big yard. It's not like it's very hard. None of the yards down there are very big.
Right.
It's not hard to maintain it. But we have gone through landscaper after and that's just a common problem on the island. It's really weird.
Did you say that this was the second row house or a block off the beach?
It's a block off. So it's technically the fourth row.
Interesting. Okay.
But it's one block off.
Cool. Cool. Well, tell us a little about your property management company. So like I know you're just starting out, and I know things are fresh right now.
Yeah.
But what's the intention there? Like, what are you hoping to do with a property management company that a lot of other property management companies might not be able to do?
Sure. So, one of the things that we look at is we want to give the best product possible, right? And so in doing that, there's a lot of property management companies that are out there that have a lot of properties. They have, 2 bedrooms, they got 7 bedrooms, they got, just a vast array. We're kind of in this niche of, we want luxury properties. We want those, those higher end properties that the owner is willing to take our advice and do the work if we think that there's things that need to be done. And then on top of that, we have like a concierge service where, if you come on the island and you want somebody to grab some groceries before you get there, we've got somebody that's going to do that.
That's cool.
If you want to set up a golf tee times, or, get some reservations at restaurants. And so we want to make it, when you come onto the island, you don't need to bring, anything outside your clothes, and whatever you want to bring for that. We've got the beach chairs, we've got all of the equipment that you need is there, all of the the access to anything that you need, we can help you with.
That's cool.
And so we want to try to set ourselves up with that, and really it started out with us just doing our own properties, and then our neighbors kind of but now we're getting calls from real estate agents and calls from other people saying, hey, I heard you're opening a property management company. So it's definitely, being that Hilton Head has been a destination location for so long, a lot of the property management companies are still, there's some of them you still go get a key. They're old school. They're very traditional in what they do. They may have 100 homes, but those 100 homes aren't being maintained, and they're not being run like a luxury high end setting.
Are you familiar with co-hosting?
Yeah.
What's the difference between property manager and a co-host situation?
So in the state of South Carolina is one of like only it's either 3 or 5 states in the country that if you are managing other people's properties, you technically are acting as a property manager, and they created a license for it.
Interesting.
So most states don't have a property manager license. So you can co-host, in South Carolina, if you're on the deed with them, you can co-host. But technically, if you are managing somebody else's property in the state of South Carolina, you need a license.
Interesting.
And so that's kind of the biggest difference. We had looked at co-hosting, and then the legality of it was kind of, it was that gray line. But
yeah,
our goal with kind of the property management is just to see where it goes. We're not looking, necessarily to build out a massive company.
It's about finding the right people. It's
finding about the right people, the right houses, the right locations, the larger properties. And then, I guess the end goal for me is, when you look at, if we build out a portfolio that also is managing properties, and then somebody comes in, it's a much more attractive buy.
100%.
When you have both things in place.
100%.
So I'm always looking at the exit down the road. What does that look like, and how can we prepare for that? So in the background, there's a little bit of that, the exit preparation side.
Sure.
But for now, it's just, how do we build out a really good product that we can have people, come to the island, enjoy their time, and if they want to, a lot of times, a lot of property management companies, they'll start out just like ours. They'll start out with you doing, your own homes, and then the guest will call you and say, hey, I want to buy something on the island. Will you manage it for me? And so hopefully, some of our guests will start to invest, and we can invest with them, and kind of build out from there.
That's awesome, man. Well, I'm excited.
Cool.
Yeah, it's very cool. I'm excited for you. I'm excited for what that's going to turn into, because I know that you guys are going to do a great job. Yeah. All right. So where can people find out more information about you, Dustin?
Sure. So I'm on Instagram. If you go to Instagram, it's _ Dustin Kennedy 84. And then our website for our homes and the property management homes that we have is hhiluxuryrentals.com.
Awesome.
But yeah, you can, and I'm on Facebook as well. So any of those, you can find me. We're always, if you're interested in getting into the short-term rental side, especially on the luxury side, or if you're interested in investing with us, we're always looking for partners, and we, looking to grow as well as everybody else. So
That's awesome. Well, guys,
I appreciate it.
Yeah, for sure. Don't hesitate to reach out to Dustin. Hopefully this conversation has been helpful to you. I know it's been helpful to me, because we've talked about your home, we've talked about Hilton Head a little bit, but this is the first time I've been able to go in depth to really understand. And so this has been really helpful. As always, this podcast is about just sharing what we're learning and sharing what others are learning in their journey of having a short-term rental and managing a short-term rental. Hopefully this has been helpful to you. And let us know if you have any questions. We're happy to help. Reach out to Dustin. He's happy to help. We hope that you have an amazing day. Thanks so much. Take care.
Appreciate it, guys. Thank you.
Hey, everyone. Thanks for listening. Hopefully this was really helpful to you in your journey of building a business. If you liked what you heard, please click subscribe and go to iTunes and give us a rating. That helps us out tremendously when we're producing, hopefully, content of huge value to you. I can't tell you how much I appreciate it, and I hope that you have an amazing week. Go out there and crush it. I'll see you soon.